In this video we are going to talk about the finest dividend stocks to buy now. So before starting, please like this video and subscribe to this channel for our future updates. Number 15. Exxon Mobil Corporation, ticker, XOM. The big oil firms have had a difficult 7 years. Since the 2014 oil price slump, most energy corporations have had to cut dividends to survive. Except for Exxon Mobil. Despite the short-term drop in profits, management kept its hefty dividend. A lot of money went into new oil, gas, and refinery projects. Exxon's offshore Guyana oil field is one of the industry's most important new energy assets. Exxon Mobil is well positioned to benefit from the current rise in energy prices because it invested through the cycle while most companies cut down. Nevertheless, Exxon Mobil's financial appeal remains strong. The dividend is secure, even if oil prices fall in 2020, and shares pay out 5.7%. Number 14. Enbridge Incorporated, ENB. Oil and gas producers aren't the only energy dividend payers. Midstream firms are in charge of storing, transporting, and distributing oil, gas, and refined products. Enbridge is a Canadian blue-chip stock and the fourth largest position in the MSCI Canada ETF, EWC. Enbridge owns one of North America's major pipeline networks and has paid stockholders dividends for decades. The corporation has grown its dividend payout dramatically in recent years, notwithstanding the recent COVID-19 downturn. While oil and gas prices fluctuate, pipelines often do not. Enbridge pays a dividend yield of 7.2%. Number 13. Toyota Motor Corporation, TM. In recent years, most car stock traders have focused on EV businesses. That's understandable given the flurry of activity and new product introductions in the EV industry. Traditional automakers aren't out. Existing customers, dealers, and global supply chain and logistical footprints are vast. And some have superior EV capabilities. Like Toyota's Prius, one of the first truly successful hybrid vehicles. Last year, Toyota said it will release 15 electric vehicles by 2025. It will also invest over $3 billion in U.S. battery manufacturing. Don't be fooled, Toyota is a significant player in the next generation. The company's stock trades at just 10 times earnings. The stock also yields 2.5%. Number 12. Intel Corporation, INTC. Nobody considers IT businesses dividend payers. Of course, there are exceptions. Intel's robust personal computer and data center semiconductor business is a cash cow. They are stable and have profited from pandemic demand. Meanwhile, Intel has used its huge profits to expand into new, future businesses. 1. Mobileye is a major driver for 2022. Intel will sell a controlling stake in the company to a public corporation. A $50 billion valuation for Mobileye would be a significant return on Intel's $15.3 billion purchase price 4 years ago. CapEx will be cut, freeing funds for core business reinvestment or shareholder returns. Intel now pays a 2.7% yield. Number 11. Lockheed Martin Corporation, LMT. It sucked in 2021. An abrupt pullout from Afghanistan caused investor concern. United States and foreign governments refuse new contracts, yet Lockheed Martin remains a top dividend stock to purchase in 2022. Finland just bought 64 F-35 fighter jets for $9.4 billion. But shares are down. Because many institutional investors no longer want to invest in weapons manufacturers. Institutions shun military contractors, lowering the admission threshold. Inflation-protected dividends of 3.2%. Number 10. Raytheon Technologies Corporation, RTX. In addition to Raytheon, Raytheon was founded by combining United Technologies and Raytheon. This entity spawned enterprises like elevators and air conditioning. Raytheon was left with a focus on aircraft, drones, satellites, and cyber. Raytheon's stock price has fallen far below the S&P 500 due to the defense industry's downturn. Raytheon is not solely a defense contractor, It also has significant exposure to commercial aviation and space. Analysts expect earnings to expand at a double-digit rate in the future. RTX stock also yields 2.4%. Number 9. JP Morgan Chase & Company, JPM. On the list of greatest dividend stocks for 2022, it might be too late. After all, JP Morgan stock has risen over 25% in 2021 and is reaching a record high. Over the same period, the largest U.S. bank's main business has risen substantially. Banks like JP Morgan are thriving thanks to a burgeoning property market, rising stock market activity, and lower interest rates. Both the retail and investment banks are performing well. The bank still trades at just 10 times current year earnings. JP Morgan's allure is heightened by its legendary CEO Jamie Dimon. The stock also pays a 2.5% dividend. Number 8. New York Community Bancorp Incorporated, NYCB. NYCB is a safe higher-yielding bank. It is a multifamily lender situated in New York City. Even in bad times, the bank makes low loan-to-value loans to minimize losses. NYCB remained profitable and paid its dividend during the 2008 to 2009 financial crisis. NY's pandemic-induced recession in 2021 boosted the bank's stock. In anticipation of a merger with Flagstar Bancorp Incorporated. With a 5.6% dividend yield, it's a great place to start. Number 7. Westpac Banking Corporation, WBK. Westpac looks promising among overseas banks. It's a banking behemoth in Australia. S&P 500 equities declined from $20 to the slowing Chinese economy is hurting the price of crucial Australian commodities like iron ore. Australasia's economy is intertwined with global growth and investors are increasingly concerned about rising interest rates and a faltering economy. Westpac and other Australian names should recoup recent losses if inflation and commodities prices rise. High dividend-paying Australian banks WBK stock yields 6.2%. Number 6. Grupo Aval, AVAL. Grupo Aval is a global bank from Colombia. The holding company owns toll highways, infrastructure, and other concession assets. About half of Colombia's exports are crude. As a result, the economy has been weak. Oil prices have risen, and the travel and tourist sector has exceeded 2019. The foreigners haven't observed Colombia's recovery, thus Aval is still down 30% from pre-pandemic levels. Despite recent record quarterly revenues, Aval pays a monthly dividend of about 2.5 cents per share, or 5.5%. Number 5. Realty Income Corporation, O. Not all 2022 monthly dividend stocks are equal. Think about Realty Income REIT. Owner of a wide retail and industrial portfolio. 7-Eleven, WBA, and FedEx Corporation, FDX. Retail locations owned by Realty Income have done well in the face of e-commerce and pandemic. It recently joined with Variety to double its property portfolio. In the present retail environment, real estate income's stock price is unlikely to rise quickly. But it's the most famous monthly dividend company, and shares yield 4.3%. A significant deal in today's low-interest environment. Number 4. BristolMyers Squib Company, BMY. A difficult year for pharma and biotech firms. Investors aren't impressed unless a company has a COVID-19 vaccine or therapy. Lower stock prices have started to brighten prospects for 2022. Since the summer, Bristol-Myers stock is down 20%. Stocks now trade at 7 times projected earnings. A poor valuation may put the company in jeopardy. But management predicts 1% yearly revenue growth till 2025. Positive things happen when growth meets a low PE ratio. BMS should maintain its profit trajectory and increase its valuation despite numerous large mergers. BMY now makes 3.7%. Number 3. 3M Company, MMM. 3M pays the most dividends. Aside from Post-its, 3M provides a wide range of products for both consumers and enterprises. A 3M product is an insulation. 3M also provides lubricants and medical supplies. With so many goods, 3M is a great method to invest in the American economy. 3M's revenue and earnings growth decade after decade makes it a good portfolio pick. Because of this, it has grown its dividend for over 50 years straight. It now generates 3.4%. Number 2. Northwest Natural Gas Company, NWN. Utilities aren't the fanciest stocks. Cocktail parties don't discuss power companies. Dividend investors sometimes ignore alternative income sources. Northwest Natural has a 50-year dividend increase streak. The recent increase in the Pacific Northwest's economy and population has helped Portland gas. In 2021, utilities will underperform. Investors discounted utility stocks due to rising interest rates. Even still, Northwest Natural's stock price is down over 30% from its pre-pandemonium peak and currently yields 4.1% that should be enough to sway some income investors away from bonds and bank CDs. Number 1. South Jersey Industries Incorporated, SJI. From the west to the east, South Jersey Industries is the greatest dividend stock for 2022. South Jersey principally runs 2 New Jersey gas utilities. One, as the name implies, covers the state's south. The other is about the NYC suburbs. South Jersey moves slowly. South Jersey's population growth is slow compared to New Jersey's. But most income investors probably don't mind. A PE of less than 15 is a bargain in South Jersey. Until 2022, shares provide a 5% dividend yield. The stock is down around 15% from its 52-week highs, making it a good buy. What do you think about our video? Please let us know in the comments area below. If you enjoyed this video and would want to hear from me again, please subscribe and turn on the notification before leaving. Thank you for watching us.